I think I am live. I am live. Yes, this is my first live. Welcome. This is DJ Sessions, NMLS number 271823. I'm really looking at trying to mix things up in 2025. You know, as I know we don't like the date broadcast, but really interesting times that we're living in today. So yeah, I want to mix it up. Again, to life with the DJ sessions. And so today, I'm trying to, today's called Mortgage Mondays, right? So you've got Market Mondays, you got all these different Mondays. And so I really want to just try to put together a topic that really is near and dear to me only because, when you're dealing with financing, a lot of the things are based on what the lenders say and how they kind of control things. And a lot of it's based on guidelines, right? So today I'm going to discuss some topics, right? And then I'll definitely maybe add some commentary into it, as I'm kind of going through it. I do have some notes over here just to kind of, so if you see me going back and forth, then you kind of understand that that's what I'm looking at here is I'm looking at notes, right? And this topic is on borrower intent, right? What are your intentions, right? And this is really the intent around understanding as it relates to the mortgage application. When you're taking an application, whether you are aware of it or not, right? I think a lot of what happens on the lending side is just based on your intent. What do you intend to do, right? The intent is really guided at behaviors, guided at past, uh, models that I assume that they can kind of go back and look and see, how did certain things perform. But, a borrower's intent refers to the stated purpose of the loan, right? That's simple, right? What is your actual purpose of the loan and how the property will be used? Okay. So clear intent is critical, right? And the reason why it's critical is it affects your eligibility. It affects loan terms, um, compliance with the agencies, right? And when I speak of agencies, I'm referring to Fannie Mae and Freddie Mac guidelines. It really does set the stage for everything, right? Um, the intent is where I think some people try to mix it up. And so what I want to do is kind of go through, kind of the guidelines, because the thing about it is a misrepresentation, even unintentional, right? Even if it's unintentional, can lead to being denied, and in some cases, future legal action, right? So you don't want to find yourself in a situation like that, right? I think that I would say in my 20 plus years of in the lending space, I would say most people either just don't know or their intentions are pure, right? And I say pure in the sense of like, hey, they just are trying to either, hey, how do I do this or how do I do that? And in some cases, there's some misinformation out there, right, that can lead someone down the wrong path, right? So when we talk about the intent, right, we're talking about, your intent and your occupancy requirements, right? And so a borrower, right, so someone looking to purchase the home must declare if the property will be their primary residence, right, a secondary home, or an investment property. It really kind of boils down to just that. If you really think about it, right? Because either this is where you primarily lay your head, or hey, this is a vacation spot, where we go to, or hey, I'm purchasing this property as an investment purposes. I plan to, treat it as an income producing asset, right? A passive asset, or whatever you want to call it. And so the agencies, right, Fannie Mae and Freddie Mac require clear differentiation because each type of loan type or each type of intent comes with different risk profiles, right? I think I mentioned that a little bit on the onset, right? It also comes with different pricing, or some people think just interest rates. I like to say pricing because it's more than just the interest rate, right? So, and when you're talking about terms, You're talking about points and fees and everything else. So it's an overall pricing, if you will. The down payment requirement, right? That's huge, right? If it's your primary residence versus it being a second home versus it being an investment property, you're going to have different down payment requirements, okay? And so misrepresentation can be considered occupancy fraud, right? So the role of intent, right, in the loan, right, purpose, whether you're purchasing or refinancing, is huge. I mean, it's a big deal. And I think, again, going back to, I think most people maybe just don't know or they're just unaware. But I think the important thing is that, you kind of get educated. And this is why I'm bringing this out here. That's why I'm going through this, right? So purchases, right? Intent is you're acquiring the home to live in, or if you're using it for income. If the refinance intent could range from improving the terms of the loan or withdrawing, right? So if you already own a property, if you're saying, hey, my intent is to, essentially refinance the loan. Maybe I want to withdraw some equity. Maybe I want to pay off some debt. Maybe I want to pull money out to improve the property, right? Maybe I don't want any money. Maybe I just need money just to improve the property. The stated intent determines the required documentation, right? It's funny because little things like that, I know that it can seem very minute, or hey, we should be able to change on our mind. Yeah, you're allowed to change your mind, but I think it's important to got to go into it with a clear understanding, of what your intent is. What do you plan to do, right? And because you got to remember, as you're starting down this process of lending and borrowing, you've got kind of the front end, but then you've got the middle end, right? And I say middle meaning you've got, third party work, appraisals, title processors, and then you've got the underwriting piece, right? They're the ones kind of checking all the boxes and dotting the I's. And so they kind of have to know from what the documentation you've submitted and kind of that overall underwriting process. So, and so if you're purchasing a property or you're refinancing a property, or even simply maybe doing a home equity line of credit, right? Again, it's there's enough data out there. And then again, going back to their algorithms and risk profiles on what your intent is, shows the lender the probability of repayment and risk profiles, right? It goes real deep. And I know it may not seem like that initially, but, like a simple, like I'll give you another example. When it comes to refinancing, whether you're looking to purchase, or I'm sorry, refinance and pull cash out, right? Or you're looking to refinance just to change the loan terms, right? Improve your terms, right? Go from, maybe you've got 25 years left and you say, I want to restructure my terms, or I'm only 15 years, right? Or maybe I want to increase my term. Maybe you start off with a 15-year and then you're like, hey, this payment is too much. I want to stretch it back out, right? The process in which what you're trying to do is so important up front. So lenders, they really verify your intent through your documentation, right? There's kind of a process, you ask them, oh, it's so much documentation, right? Well, part of that is they're sifting through to make sure this isn't fraud, right? Make sure they're actually doing what you want to do, right? And they'll look at old past settlement statements, right? They'll do some invoices. In some cases, they're going to want to see evidence of improvement, right? Hey, I want to refinance because I want to pull some cash out, and yes, I've improved the property. Okay, provide proof and evidence that you've done it, right? Whether it's affidavits or any documentation that you may provide, again, going back to the original, what is your true intent, right? What are you truly trying to do? You should be able to exercise that throughout the lending process, right? Or at least throughout the loan application and processing process, right? These are whether you're purchasing a property or all those things, these become legal binding documents, right? You're affirming your intent. For example, if you confirm whether the property will be used as a primary residence, right? And then they find out that it's not your primary residence, it can lead to legal ramifications. Let's just call it what it is, right? Yes, it's going to be my primary residence, and then they find out it's not. Well, you've committed mortgage fraud, right? You've actually, technically committed a crime. I mean, well, no, it's real. You got to be clear, right? You're talking about money, and I have this old saying that it was told to me, about, there's never a problem until there's a problem, right? When there's default clauses, man, when you're dealing with other people's money, right? OPM, you're dealing with the ramifications of that. And again, most people, it's a non-issue, right? It doesn't really matter because they're not going in it from intent. But unfortunately, there is a segment of people who do that, who are at least trying to, what I call, game the system. And unfortunately, as a professional, right, a mortgage professional of mine, I have to kind of sift through that. I got to make sure that that's not coming through on my end, because I think even when you're trying to say, hey, this is my intent, or this is what I intend to do, I've got to fulfill that promise, right? And then if you try to change gears and switch gears, and again, I've got to kind of state it correctly, and that this is what we're trying to do, then we've got to kind of navigate those waters, right? If you're occupying, another example would be, let's say you're occupying, buying a primary residence, you're stating on the loan documents and in the application that you will reside within that residence within 60 days of closing, right? I mean, this is understood. This isn't, oh, hey, I started, but then I changed my mind. No, you're stating in all your documentation that this is going to be your primary residence within 60 days of closing, right? If your intent changes, right, after you close, right, you've got to notify your lender technically, right? And there is definitely, a possibility they can recall the loan, right? It can get real deep, because again, they're looking for, mortgage fraud or anything that can, they're trying to stop that, right? Trying to catch it. And the thing is, again, it goes back to the algorithms and the data that's been in place over how, quote unquote, loans perform based on the intent. That's why it's all built in the pricing, right? It's all built in on, if someone says, hey, I'm buying this as my primary residence, versus someone saying, hey, I'm buying it as an investment. Just those two simple things are clearly two different risks, because you're doing two different things, right? One, I'm living here, I live here, and most people take care of their primary residence, right? There's the likelihood that you're going to make those payments on time, no matter what, usually, because that's where you live. But if it's an investment property, right, 6 months in, maybe you got a tenant who says go kick rocks and doesn't pay you anymore, right? Or whatever the case may be. That's a risk. Now we're talking about, does this borrower is in a better position to be able to handle this investment property? Is the loan priced that way, right? There are, stringent verification measures, right? In some cases, there's a spectrum there, right? There's a spectrum. Documents that do cross-referencing. You've got lease agreements. There's utility bills. There's definitely ways to confirm someone's intent. I remember, I was helping a client with the refinance, and one of the requirements was, hey, we need a utility bill in your name. Whoa, what do you need that for, right? Well, again, you say you live here, it's your primary residence, right? We've got to prove that you truly live here. And the thing is they provided it, and it was a non-issue. But again, it confirmed that intent, right? It confirms, lenders can only do so much, right? To try to, on the front end, because again, this is an application. This is what you said, emphasizing and reviewing stated intent against your behavior, right? Is really important, right? Another example would be, you buy the property as a primary residence, but then you list it for rent soon after it closes. You know what I'm saying? Like, again, a clear violation, right? And Fannie Mae, Freddie Mac, the agencies, Ginnie Mae, they again can only go so far on the front end. And even me as an originator, I can only go so far as to going off of what you disclosed to me, as a, as someone who is, let's say an officer of a company, right? I've got to due diligence myself, right? And so I think for me, I like to just make sure we're all clear, right? Because I think sometimes people may and I think one of the ways of this getting kind of construed is like multifamilies, right? There's some guidance where, hey, I can live in one of the units as my primary residence, but I've got 2 or 3 other units that I can rent out. So I may look at that as, hey, I'm an investment property, right? So just those little nuances, right, are kind of, you may have to bring that to someone's attention, right? The application, right, that collects all this information, it lists on there the purpose and your occupancy intent, right? You must specify that. So on the application, it's kind of clearly stating, what your intent is. But going back to that example with the multifamily, right, the rule is you got to live there for at least a year. No harm in that, right? And to me, I look at it as a win-win, because especially if you're a newer investor, right? If you're a newer investor and you're maybe buying a duplex or something, well, yeah, you live in the one side as your primary residence, you're renting out the other, you're learning how to be a landlord, right? You're learning how to those nuances, right? So, and I think those are things that sometimes get understated when you're thinking, oh, I can be an investor and I can do all these things, but there are more to it than that, right? There's more to just, renting out a property, right? And so again, when you're kind of misrepresenting the application, or they become discrepancies, right, it can lead to not only delays in the application, but it can also be denied, right? Intent in Fannie Mae and Freddie Mac, they kind of look at things a little different as it relates to investment, right? We looks like, look here. Freddie Mac requires the borrower to confirm their intent as an income generating asset, right? Lenders often ask for rent schedules or projected income statements to substantiate the claim, right? Fannie Mae and Freddie Mac both focus on intent-related fraud prevention, right? They use automated systems to flag inconsistencies in such as borrower statements as it misaligns tax returns or unverified income sources, right? Practical application in mortgage financing can clarify a borrower's intent during the loan application process, right? We can ask questions like, do you plan to move into this property within 60 days of closing? Will you rent this property out, right? Documentation like utility setups or proof of relocation can further substantiate the borrower's claims. These are, we go down to pretty deep here. And then the impact of, again, changing intent post-approval, right? Decides to rent out the primary residence, well, then it changes into, an investment property, right? Refinance purchase after approval, right? I think that's important. And I know, especially with refinances, I know a lot of times I like to, kind of say, well, we can switch terms after we may have the appraisal back. Because I know with refinances, sometimes you really don't know. And so maybe someone's intent is that, hey, look, I just want to refinance just the balance only. And that's great, right? Maybe the appraisal comes a little higher and you present, hey, we changed the loan terms, right? Which changes pricing, right? We renegotiate things. Maybe we go from a rate and term to now a cash out. Well, those are two different things, right? When you renegotiate, and that's completely fine, but you got to be prepared. But now, let's flip that same scenario on a purchase, right? Hey, I'm buying this as my primary residence, okay? And you decide midway through, I decide I don't want to live here anymore, but I really like this property. I want to change it to an investment, right? Well, obviously those terms change, right? You may be putting only 5% down. Now you got to put 25% down, right? And again, as long as you're aware of it, right? That there isn't any problem. It's when you're trying to be mischievous about it, right? When you're doing things you shouldn't be, is when it becomes a problem. Okay, so here's a couple examples here of intent and scenarios and outcomes, right? So let's see here. Borrower states intent to use the property as a primary residence, but listed on a rental property immediately post-closing, right? Well, what's the outcome? The loan is recalled and legal action happens. It's real talk. This stuff happens. Okay. Example number 2, a borrower seeking a cash out refinance fails to disclose intent to use the funds for an unrelated investment. Outcome, the loan denial and higher scrutiny. Okay. During the underwriting process. Now, educating the borrower on the importance of the clear intent, right? So borrowers should understand that lenders are obligated to verify intent to ensure compliance with federal and investor guidelines, right? Mortgage professionals should provide a checklist to guide borrowers in articulating their intent correctly. Right? It's really important, right? Legal ramifications, again, misstate borrower's intent, misrepresentation of intent. It's considered mortgage fraud. Borrowers can face penalties, loan rescission, or even prosecution. Mortgage professionals should educate the borrowers on the risk of avoiding misunderstandings, right? So that's important. And I think that's why having a great conversation up front, right? Making sure everybody's clear, everybody's on point, right? So that way, you can have a smooth process, right? And get that clear to close in 5 to 7 days. I'm just kind of looking through some of these other notes here. Obviously you want to have some education, so that's some of really what I wanted to kind of go over today as it relates to the first episode of Mortgage Mondays. I know that there's so much information out there. There's so much data. You can AI stuff. You can really get real deep into it. But I think that it's really important to keep the basics still the same, right? Let's still make sure that that when you're going about borrowing money and part of this lending process, because this lending process is very critical and key to building wealth, right? You can Google, you can look out there that wealth is through real estate, most of it, right? There's some other avenues, obviously, but and so when you're trying to get all this real estate and build that investment portfolio, you want to navigate the waters correctly. This again has been another episode, right? The first episode of Mortgage Mondays. Have a good day.